Daily stock market update. It is the 8th of December at just after US market open. It's quite positive news in terms of the background and what's going on, or the background noise. The NASDAQ is rising. Broadcom, one of the stocks that I own, is one of the major gainers as part of that. This is positive because it shows that the silicon chip story is still there. The AI story is still there. The worry was, is it all hype, and are we about to get a drawdown into December in the markets? We're clearly not. If anything, we're getting ready for a Santa Claus rally, not least because the Federal Reserve will give indications on interest rates. Now, it's become less about whether or not they cut rates, more about the tone of voice they use. I know it sounds ridiculous, but that's what the market's looking at. If those are the clues, those are the things that we would be looking at. Either way, it looks positive. If you get some downward movements, it will be no need to panic, because the direction of travel is definitely in lower interest rates. In terms of what's going on in the news wires, I'll come to that in a second. Equity markets, of course, start of the week, a little bit subdued, a little bit quiet. Not particularly worried about that, given that central bank interest rate issues coming up. So the FTSE 100, which is going to take its cue from the US markets, and the FTSE 250 were fairly flattish, and there's key rate decisions coming out of the Fed and, of course, the Bank of England, and that's why it's just more wait and see. But like I said, whatever happens in the short term, whether they cut rates, in which case we will expect more cuts, or they don't, in which case we will expect more cuts, it'll be positive medium to long term. So I don't care if the markets dip a bit and cause others to panic. The sentiment, it is said, is somewhat cautious in terms of the UK markets. Again, unknown big event. People don't really want to take big gambling bets around that. Commodities, oil's off a little bit. That's good. Anything below $80 can ignore. You can essentially ignore it because it's good for equity markets. It's good for consumers having more money in their pockets. It's good for businesses having lower energy costs. Gold is at $4,200 an ounce. Again, everyone's just waiting on what the Federal Reserve's going to do. A gambler will try and gamble around what the Federal Reserve is going to do. An investor will look through it, will play through it. Bitcoin a little bit higher at $91,000, not low enough for me to want to buy, not enough momentum for me to want to buy. So just continue holding. At what price would I sell? Well, given my timeline for Bitcoin is 10 years, there's no need to be thinking about selling at all at the moment. Again, I'm not looking to trade it because that then mitigates my risks. Corporate earnings, hardly any. So it's all about macroeconomic news, and macroeconomic news, inflation figures, nothing much coming out on those. There's some New York Federal Reserve inflation numbers, really irrelevant. Nobody cares. Corporate highlights, IBM are close to acquiring a company for $11 billion. Good. Marvell trades a little bit lower because it's not going to be in the S&P 500. Still a good company. Get there next time. Tesla, not one that I own presently because I don't like the volatility. That's off a little bit because of some broker downgrades. I guess somebody's been looking at the share price and the profits per share. So again, not something which is going to really move the markets. What's happening on the wires, and what's the news coming out of, say, CNBC? What are the headlines? Elon Musk calls for abolition of the European Union. Okay. Ray Dalio, world's largest hedge fund manager, said he would play the markets if he was still running Bridgewater. Fine, good. That's fairly positive news in many ways, that there isn't the scary headlines. I mean, what we're looking for in terms of is the music, or what's the sound of the music in the background, is, are there scary headlines coming out of CNBC and Bloomberg, because they can shape some degree of sentiment. Not at the moment at all. So all good there. If I look at the Bloomberg headlines, there's one story with Alan Howard. I once spoke to Alan Howard, one of the best hedge fund managers in the world, in 1997, for him to be in my book, The Mind of a Trader, which the Financial Times had published. And Alan picked up the phone. He said, my employer won't let me do it. He was at Tokai Bank at that time before he set up Brevin Howard, based out of Baker Street. He says Abu Dhabi can rival London as a global hub for hedge funds and finance. And the man's shrewd. Doesn't mean we need to flee London right now. The Paramount story, that merger and acquisition is good market news, Paramount and Netflix. The reason is it's showing there's transactions happening and they're not distressed transactions, which is what happens at the bottom of an economic cycle. That kind of transaction volume is good for banks. It's healthy for the economy as well. So overall, when I'm looking at the news, all relatively positive. We go back to no news is bad news. So that's good, or no news is good news. Sorry. So that's good for us and the markets. And it's just, hey, take it easy, put your feet up, take another day. We have got some new tools coming up on Campaign for a Million, campaignforamillion.com/tools for portfolio calculations and pension calculations, all sorts of those things. They're completely free. We don't even want your email address. My request, as always is the case, and you guys have been fantastic for this, so thank you. But my request is, please save this video, comment, like. The reason is, if I get 3,000 views a day, I'll do another free one the next day. I'm going to do it for free. All you have to do, and it doesn't cost you anything, is to save the video. TikTok love saves the most. YouTube likes it, shares the most. Okay, comments, they count for less, but if you were to comment, that'd be great. But certainly likes make a difference as well. So subscribe, like, follow, all of those things. They will boost the viewer count up because the video will be shared with other people, which is good news. More people get to see it. But that means it motivates me to do another one the next day because I'm not speaking to an empty room. If I'm speaking to an empty room, why bother? So I hope you do like these. And as a result of you doing that, you've been fantastic up till now. We've got thousands of views. I've also created a new series of videos. One is Stock of the Week, which might be more than one stock a week. I should almost call it Stock of the Day, but I didn't want to commit to that. So we'll be commenting on important stocks that are in the news, which are most likely the ones you're most interested in. So again, keep the views on this going. You know, save that video, repost it, forward it to a friend, forward it to Twitter. That always helps because that's a multiplier effect. Then people on X, Twitter, click on it and more of them see it. So all of those things help. Repost it on your Facebook. Because then I'll do more of the series. The other series that I've started is Fix Your Pension, where I'll look at a particular pension, which is particularly in the news headlines, you know, one of the big ones like a Fidelity or whatever, and I'll explain why they produce such low growth, because institutionally they have so much capital, they have to put so little money in the good companies because they've got so much money, they have to spread it. And I'll explain why that leads to lower growth for your pension. So that new series, Fix Your Pension, you'll see that on TikTok and on my YouTube channel. And we'll invest more time on the free tools and the free apps and the free calculators. All you have to do as payment in return is like or follow or subscribe, or all three. The more of those things you do, the more the algorithms pick up on it and the more it's shared to more people, which makes it worth my while doing. Thank you all very much. And I hope it's a win-win for both of us as a result of that. Thank you.